Good evening, ladies and gentlemen. Thank you for your attendance with us today, and good morning, or it might just be past lunchtime in New Zealand. Good afternoon to our friends in New Zealand, and good to have you here with us today. We're going to talk today about some very important things, and let me get them out of the way first. First of all, I want to just remind you that Monday is a public holiday in the US, and Memorial Day, very important day where the US recognizes the service of military and others who served the country in the war, in a number of wars. All of the wars are sort of similar to Australia's and New Zealand's Anzac Day, which we had towards the end of last month. So markets will be closed on Monday. Some markets actually will close early on Friday, T-bonds, and a few of those other traditional C-bot markets close early. Volume will be very light on Friday in the equities and other markets, I suspect. They usually are. So just be aware of that. There'll be no TO3 plus signals on Monday, as it's a holiday. There won't be any for Tuesday because we require markets to have a full day of normal trading to reset after a market holiday. Forex trades all the time, as you know, so Forex will trade as normal on Monday for you Forex folks. So the charts, the all-important Danielcode charts with the magic numbers on them, will be done as normal. Ben and others who are great followers of the charts, Forex charts usually go up my Sunday night, and which will be your Sunday night's your Sunday, your Saturday really, and futures go up on your Sunday, my Monday morning. So looking forward to that. Okay, fourth seal, folks. For those of you who are not following the fourth seal, you should be. And Frank put up a very special alert earlier in the week because he has done a detailed analysis of the Dow Jones Transport Index, which is an important driver of the Dow Jones markets and a big component in divergence. All of that Dow Jones theory that some of you may have read about is based on the divergence or the confirmation between the index and the transport. The theory is that the goods being produced and the value of those goods will be reflected in the various companies' balance sheets that make up the Dow. This was old Charles Dow's original theory, but if those goods are not moving out of the factories, then there's a problem. And he developed this Dow Jones Transport Index originally on the train stations. Now it also includes lots of other forms of transport, but it's a very important market that runs as a subsection of the Dow Jones Index, and you should make sure you have a look at Frank's analysis. It's very, very important. And you will see that at the Danielcode website under the S&P fourth seal tag. And those of you who are already following the fourth seal, it's been absolutely extraordinary. And great stuff for you. So I think they were the main things I want to tell you. What I really want to talk to you about today is Frack-Zen. We now have the figures in for 1 to 16 May, which takes our scoring of the results by Sage and Darryl now to 19 weeks. And it's just all getting very solid, and we've just had an incredible fortnight's performance. And Darryl's given me some very, very interesting insights to share with you. So I've got to go through some other stuff. I want to talk about some trading techniques, and I've had a question from a relatively new member, Marilyn. So Marilyn, welcome, and lovely to see you here. And I'm going to talk about when and how outside bars are elected and how to trade them. I'm also going to quickly refresh true inside bars, true outside bars, and we've done a lot of this before. On the website there are PDFs that cover some of this stuff. It's a veritable storehouse of teaching knowledge here at the Danielcode, but I'm going to go through those again. And I also want to show you a little bit about how you should trade after a Danielcode signal has been elected. What you see here on the screen at the moment, this is an image of a perpetual motion machine. And of course there's no such thing, because no matter how much they've tried to do it, parts degrade and require maintenance, require replacement. Even the ones that work on magnets, which were very, very promising, eventually sheer friction means they do require maintenance, which effectively defeats the strict definition of a perpetual motion machine, but it's close enough for me. And I wanted to share with you this idea that I had many, many years ago, long before I even started trading. And I'm sure I'd be a very young man then. And I'm sure all of you have sort of had these momentary fantasies that flash through your head. I have to tell you, because I don't want Shift to be disappointed, that most of my fantasies have come true, which is very nice. But this one, I used to see, as I'm sure all of you have done, you'd see film clips of these oil pumping machines in America, where the wellhead pumps would just be going up and down and up and down and up and down, and oil would be gushing out. And of course, that just meant a continual supply of money. And occasionally I would have a fantasy about a similar sort of thing with a gold mine. That, you know, wouldn't it be nice to have a gold mine where you could just go and pop in and pick up a chunk of gold when you needed it? And of course, they were fantasies. If you ever get into the oil business, as I have been many years ago, it's a dirty business. It's a very risky business, an enormously expensive business. The capital requirements are absolutely horrendous. And pretty much the same with the gold mining. I know you can go panning for gold with a little bit of a gold pan, and there's some, you know, sort of fairly interesting documentaries being shown recently on reworking some of that Klondike gold, and you know, it's been pretty interesting. But again, same thing, capital and labor, massive amounts of capital for the big machinery, and either profit sharing or wages for the guys who are doing the work. So those sorts of fantasies had those limitations, but I progressed from that to thinking about a perpetual motion machine that churned out money. And it's long been my ambition to develop that. And as we've gone through the many years, those of you who've known me for a while, we've developed blue line trades and TO3 trades and plus signals and fourth seal and all sorts of things. GMAG, putting GMAG Pro and the fourth seal together, which you're going to have the chance to see pretty soon. And all of them have just been a progression towards this idea of a perpetual motion machine that churns out money. And, you know, I'm starting to think with Frack-Zen, we're getting very, very close to that. And I know that's just a huge statement. And those of you that haven't met me, I'm a lawyer. I'm an old lawyer. And old lawyers become wise old lawyers. And you become super cynical and you want to test everything to breaking point. You know, this Frack-Zen is quite extraordinary. I mean that with, you know, over 30 years trading experience. I've never seen anything like it, and I invented the thing. So I can tell you no one is more surprised than I am, but it's quite extraordinary. We've just had a massive, massive first 2 weeks of May. And Sage and Daryl have been kind enough to continue their amazing work of keeping these records for us, the scoring of Frack-Zen. It's an absolute labor of love. I can tell you for Sage, it's a full-time, must be very close to a full-time job for her. She takes all of these signals and goes right back to 1-minute charts most of the time to get the correct entry point to match when the signals were received. And She's just done a huge amount of work and follows all that up with charts that reflect that trading, some of which you see on our Facebook page. And Daryl then takes all those results, checks them, double checks them, puts them into these spreadsheets that I show you. So we're most grateful to them because one of the interesting things about Frack-Zen is it can't be back tested because the settings change periodically, sometimes every day. So we're very, very reliant on Sage and Daryl to keep these figures for us, to keep you informed, let you make the choices you need to make. But anyway, let's move on because I've already spent 12 minutes talking and I want to move on to the various issues here. This might be a little bit disjointed today, folks, because I've got a PowerPoint that I want to run through fairly quickly for you, because after this I want to get onto the charts excuse me, and show you the practical application of these things that are on the PowerPoint. Some of you who've been with us a while and done tutorials, you will already know this stuff, so I beg your indulgence, but please don't go away, because after I've finished the PowerPoint, we then go to the charts. I'm going to show you how these things work in real life on charts, and then after that I'm going to get to these Frack-Zen results, which really do require some thought, discussion, and insights. There are getting to the stage now with Frack-Zen that, I don't know, I don't want to make too big a statement, but you can make your own conclusions when we get to those spreadsheets a bit later on. So working towards this idea that with our normal Danielcode trading, we've got these are the pieces of the game. This is what you need to understand to push your trading out further from just 1 to 3 day sort of trading, to hold these trades longer. Now, for those of you starting off and just follow the program, follow what's on the website, tells you how to trade these signals. But for others of you who want to hold these trades a bit longer, I want to show you what are the real ingredients you need, and these are there. You need to know these Danielcode numbers, but first and foremost, if you're not seeing the Danielcode blue line charts that I do for all of the Frack-Zen signals twice a week, and using the Danielcode retracement tool, which all of our members get at no charge, then you really have handicapped yourself. You might as well, tie one leg up very tight, because you're missing out on the real core of the Danielcode, which is about the numbers that the Danielcode creates. Now, I don't cover all of the markets on the website, because the work is just absolutely horrendous to create those charts, but I do have Danielcode numbers for all of the markets we cover, and whilst we create charts for 20 of the markets, I've got the charts for all of the markets, and that's how I post these signals for you. So that's the first part of it. The second is the 3-day rule, which is very important. If you just tuck that inside your head, I'm going to show you that on a chart when we get through the PowerPoint part of the presentation. And basically what that rule says is that trending markets will consolidate or have a counter trend of 1 to 3 days. And that's all now. That rule's about as hard and fast as everything else in trading. Yeah, you can sip it out. It might be 4, but normally, the vast majority of times, trending markets will not consolidate or have a counter trend for more than 1 to 3 days. You need to know that, because when you get 1 day up or 2 days up, you don't know whether that's a trend change or whether that's a counter trend. But there are some points that will give you a very good idea about that, but you need to understand that and know how to trade it, which I'm going to show you. Inside bars excuse me, are so called because they're wholly enclosed within the range of the previous bar, and that would mean that the high of an inside bar had a lower high than the previous bar, and the low of an inside bar would have a higher low than the previous bar. An outside bar is called because it's just the opposite of an inside bar. An outside bar is wholly outside the range of the previous bar. In other words, an outside bar will have a higher high and a lower low than the previous bar. I use color codes on these charts, Trade Navigator charts, to make sure I can see these and identify them quickly, and I use red for inside bars and gray for outside bars, as you'll see when we get to my charts in a few moments. You'll see when we get to these charts that I use the expression true inside bars and true outside bars. And that's because we need to understand the concept of true highs and true lows. So you have two things on a chart. You have a chart high and a chart low, and very often that's not the true high or the true low. And don't be confused by any of this or wondering about it. I'm going to show you this exactly on the chart so you understand it fully. For those of you, some of you, this might be a bit new to you. And finally, as we sort of move through our trades, which, in a time frame, we can start with our 6-day charts. We do use 12 and 24-day charts for market timing, but in your day-to-day trading, you'll be concerned with the 6-day charts, which are our prime timing charts, and then you'll be concerned with all these other things that you see on this page. I wanted to show you some of these charts briefly here, and I'm going to probably take you to the charting pages later, but the first starting point for anything to do with the Danielcode is these blue line trades. And you can see here, this is a blue line trade that set up a couple of days before. These trades, blue line trades, are valid for 3 days, including the day of posting of the signal. No, you don't have to count them because they're included in our Danielcode trade program, and it knows whether they've been elected or not, and it counts them for you. Elected is a crucial concept for the Danielcode, that after we've created these signals and assessed them and done everything else that we do to create them for you, we need the market to tell us that we are correct, and we need the market to move enough to confirm the signal. And what we do when a trade is elected, a buy trade, would have to trade above the true high of the previous day's bar. Usually, there's an exception. And a sell signal to be elected would have to trade below the low of the true low of the previous bar. And to that, we add a buffer. In Forex, it's 5 ticks. In futures, it's 2 ticks, by which I mean if we were taking a buy signal, we would be looking to enter at the true high of the previous bar, plus 2 ticks, and we do that because markets are inherently a little bit sloppy, and sometimes they'll just kick out the high or the low by 1 tick, and we don't want to be elected in that case. Moving that out to 2 ticks is not a guaranteed fail-safe. Sometimes we'll still get elected when we really don't want to be, but it does get rid of a lot of the false signals that flow. So that's what elected means, and any time we have a signal, it means nothing until it is elected. So we have a lot of signals, and less than half of them are actually elected, but that's an essential part of the Danielcode world. I want to just show you some of these, get you thinking a bit about what these signals mean. This is a GBP USD, and you're now seeing that your screens have changed. If you look at the bottom bar there, it's a key reversal bar at a very important Danielcode red line, and that set up a TO3 trade. Now, the TO3 trade was actually posted for the day before, but it was not elected, so it carries forward for another day. TO3 signals are valid for 2 days, and then it was elected on the second day. If you look at the stochastics of this, and I'm going to show it to you on a chart, this is really close enough to a blue line trade in drag. So just bear that in mind, because this is one of the prime reasons why you would hold a TO3 trade longer than our rule book says, which is exit first profitable close. And if you can get your head around this, you're just going to get a lot more money in your accounts. This is a sugar chart, which you should see very quickly. And what I want to show you here are the plus signals. And plus signals are simply a variant of the blue line signals and the TO3 signals. Those signals have very, very specific rules about which way they've got to be pointing, where they've got to intersect with important Danielcode numbers, and not all of the signals exactly match all of that criteria. So we can have 5 or 6 criteria to create a blue line or a TO3 signal, the most important of which for the blue lines are the fast and slow stochastic, as we've talked about before, and the our proprietary momentum indicator, which is an adapted CCI study. But plus signals are, they're just the same. They're reversal signals, although they can also be often are continuation signals. But for the reversal signals, they're really a variant of the blue lines and the TO3. So let me just focus on this chart here with the highlighter. This bar right here was actually a TO3 buy. And if you look down at the stochastics, you'll see that this market was very oversold and setting itself up for some sort of a reversal. Now, the TO3 signal was not elected, so it was followed by a plus signal because the the inside bar after the bar the highlighter's on just negated the time for the TO3 signal. The 2 days validity was up, so I created a plus buy signal, and as you can see, it roared up nicely right up to the big blue line at 1829, and we got the same thing there. We had a TO3 signal that elapsed on time, and we then got a plus sell signal. So you can see that these signals work when you have the screening criteria of the stochastics in the right place. These signals work in a practical sense the same as the blue line and TO3 signals. So those of you who are not looking at the plus signals, you're missing out on a great deal. You can see here's the sugar chart with the big rally up and 1, 2, 3, 4, 5 days down, 6 days down now. You got the run up and the run down, and if you weren't getting the plus signals, you missed out on that entirely. So those of you who are not getting the plus signals, I wanted to show you this to show you how worthwhile they are, and I suggest you get on and get hold of those plus signals as well. This chart, your charts have now changed. This is oil, and I wanted to show you how to trade this sort of result that happens here. And the main thing is that because we know that reversals, counter trends in a trending market will not go more than 1 to 3 days. Now, there are lots of other consolidation reversal patterns with various time counts on them, but from a practical point of view for trading, once they've gone past 3 days, we have no insight into what that pattern will be. Excuse me. So once you get a 1, 2, or 3 day reversal, we don't know whether that's a change of trend or whether it's simply a 1 to 3 bar counter trend, and the trend will continue. And that's what happened here. And for this bar here, and it's the same for all markets, you had a TO3 sell signal. Now, all of the Danielcode sell signals, the TO3s and the blue lines, are followed immediately by a signal the other way. In other words, we had a TO3 signal, time was up, time was right. These are the TO3s are time count signals, time was up, stochastics were getting into the position where they're overbought, all the validity was there. We had a sell signal which was then elected on this bar on which I have the highlighter. But we don't know whether that's going to be a 1 to 3 day counter trend or whether it's going to be a complete change of trend. So when those signals are elected, they are followed immediately by a signal that will take you back into the trend. And nearly all of those are plus signals, but you ought to be able to do this yourself, and you should certainly be aware of it. So after we had that TO3 sell signal, the very next day you would create a plus buy signal, and it was elected. And then you sat quietly as this market roared up into this big blue line. Now, Whenever we create a signal, we have an entry and a stop loss. Some of these markets we provide first targets for the TO3 signal. But the main thing is we need to know the point at which the trade will fail. And the failure point is the swing high or the swing low. So you can see the bar that the red highlighter is on. Once the market takes out that high, the sell signals have failed. So long as it's below that high, that's the high of which the setup bar the day before the signal was elected, anything below that is what we call potentially a hook. So as the market tries to move up into that point, the sell signal still dominates, and we would sell any up bar because the hook is a traditional way that markets retest and then continue on the way the signal indicated. But if it takes out that high, it means the sell signal has failed, and you're now going to get a continuation signal. So if you had trouble understanding that, don't despair. This is going to be, it is being recorded, and it'll be posted hopefully tomorrow. You'll be able to go through this at your leisure. Now, if there's any of this stuff, folks, that you don't understand, please write to me. My email address is under the contacts page tab at the Danielcode website. It's jneedham@thedanielcode.com. If you don't understand some of this stuff, don't try and battle on and flog yourself with it. Write to me, send me an email, and I will respond to it as soon as I can now. My email responses are not always immediate. Sometimes I get involved in projects, and it may take me a few days to reply to you, but don't despair. I promise you I will reply to you. I don't know quite how long it'll take, but I'll do my very best. Okay, now this is a true inside bar. You can see this bar in red. I put it in red for a reason. Inside bars and outside bars are important, and I want to be able to identify them. So you can see here this red bar on which there was a plus sell signal is wholly inside the previous big bar. So this is a true inside bar, and we have a protocol for trading inside bars. And if you want to, some of our more experienced traders will actually just have their entry point at the high or the low of the inside bar, plus or minus the buffer I talked to you about. 2 ticks in Forex in futures, 5 ticks in Forex. But statistically, that is not a good way to trade inside bars. And our rule is that to trade an inside bar, the point of entry is the true high or true low of the last bar that was not itself an inside bar, which means we stay out of a lot of the churning. I back-tested this idea for years before I released it, and then everyone promptly stole it, or claim credit for it, as they do. But you will find, particularly if you're not very experienced in this stuff, use the Danielcode inside bar strategy. That is, your entry is at the true high, true low of the last bar that was not itself an inside bar, plus or minus a couple of ticks for the buffers we require. Sometimes you will see that if you don't take the inside bar trade where the inside bar is, the bars are so big that it's not worth pursuing the trade further. So there was a sell signal on the inside bar. If you were an experienced trader and you sell below the inside bar, you've got a jolly nice trade. And I think it's gone a little bit further today. It has. But if you were following our rules, you'll see with this bar that the trade was elected in a factual sense, that it traded below the inside bar. So that tells you something. But our entry was down below this bar here. That's the last bar before the inside bar that was not itself an inside bar, and that was not elected. But when you see this pattern that the trade is elected but we don't get into it, you are obliged to take a sell signal of the next bar to get into the trade, unless, in this case, remember that if you do that, your stop's way up here above the swing high, and the risk reward on that particular trade is not really going to be so good. So, you know, this is the thinking man's or thinking woman's game. Use your brain and follow these rules, and you'll get some amazing insights into market. Here's a true outside bar, Maryland, for you, and I'm going to show you how to trade it when we go, not only now, but when we go to the charts. What sort of thing happens here is that this is not a particularly good example, but it's an old chart that has a massive outside bar, and I thought it was just so dramatic I had to use it. When we get to the chart, I'll show you exactly how this stuff works. And this is the aim of it. What I'm trying to get you people to get to the stage that you can put it all together. And you'll see on this chart, which I think you've actually seen before, you can see a TO3 signal, you can see a plus signal, and at our last webinar I went through the blue line trades, which you understand. So the idea is to be able to put your trading together as you get more advanced. For those of you who are beginning, don't try this stuff, just stick to the rules as I put them on the website. These TO3 trades are optimized for safety. They're not optimized for maximum profit, but now I'm showing you how you get the maximum profit. When you feel confident enough, I want you to be able to try and stitch this stuff together so you get the reversal signals and you get the continuation signals, as you can see on this chart. And right in here, you can see the TO3 buy signal, just as I've been talking about. That's 1 bar up. The next bar is 2 bars up. We don't know if this is a trend change. It's unlikely, because if you see, this is a contract roll over here. So this is not giving you the best example. I'll have to show you the actual chart. But you hadn't at this stage got an oversold stochastic. And this was telling you it was going to come a bit later. Now, there it did come, and you got this kick up, 1 bar up, 2 bars up, and we're left with 2 choices. Either this is a trend reversal, which is possible, or it's a counter trend, in which case you'll want the plus signal to get you back with the trend. And this was a plus signal right here. I'll put this above the bar so it's a little clearer. That plus signal, the sell was elected. It didn't look very pretty on the day, did it? But that was elected there. Your stop loss was above this bar at the swing high, and down it went, and you finished up getting a lot of money, $2,700 per one contract, out of just knowing the plus signal continuation trade. If you don't subscribe to the plus signals, I've shown you how you can do this yourself without me, which is always helpful to you guys, but I do recommend that you subscribe to the plus signals, and you'll get a fuller picture of market trading and how these things all work together. Excuse me. This is I'm going to come back to this very shortly. Let's see where we are here. And this is Frack-Zen, the Frack-Zen update, which Sage and Daryl have kindly done for us. This is only 12 trading days, folks. This is 1 to 16 May. You've seen the monthly trading results for January to April, and this is the next fortnight's update, 12 trading days at the beginning of May. And as you can see, this stuff continues to be absolutely staggering. Nearly $19,000, let's call it 19. What's the difference? $100 in futures, and $10,500 in Forex, or $10,700 if you were using Daryl's 180 tick stop idea. I'm going to come back to this in a great deal more detail and show you the full spreadsheet and talk a little bit about what the implications from that all are. So let's move on here. I've got this starting to get this idea about intraday trading. It's something I didn't know much about, and in fact we've never done it, but there are people who offer special facilities for intraday trading, and one of them is a gentleman called Craig Ross, who I've had some correspondence with lately, and he's the principal of Apex Futures, who are very much involved in this. And they also have traditional brokerage functions as well, but the point of this intraday trading is that they will let you trade futures with a very, very reduced margin. So as an example, the E-mini S&P, the margins 4,500 or thereabouts. But these intraday trading facilities will allow you to trade that contract on an intraday basis, which means you must be out at the close, you must be flat at the close, but they will offer you a margin of $400, which is less than 10% of the full margin. Now, for futures traders, margins are a bugbear because you've got to have a big enough account to cover the margin and then some. And this intraday trading gets away from that. And in addition, they offer very, very much lower commission rates. So I don't know much about this yet, and I can't tell you how Frack-Zen works with it, but it seems to me that it probably has massive potential, and all we need to do is put a filter on the Frack-Zen signals to say, start sending them 1 hour before the market opens and stop sending them at, say, 2:30 on a US trading day. Most of these markets close at 4:15, 4:30, 5 o'clock. So you would have the whole of a trading day or part of a trading day to get the Frack-Zen signal, place it, and exit market on close. And what actually appealed to me is you have probably noticed that the DAX, German index, is making a ton of money, but the margin's huge and there's no mini contract, but margin on that's about 25,000. But with these reduced margins for intraday trading, you can trade the DAX for 5,000. Margin, you can trade the S&P, as I said, for 400 or 450 thereabouts, and all of the other commodities and indices that we trade have reduced margins, and the size of those margins is a function of liquidity, because obviously with such small markets, margins rather, the brokers are watching your trade, and at some designated point, if your drawdown gets too big, they're going to close out your trade. But if you're putting your stops where I tell you to put them with Frack-Zen, that shouldn't be a problem for you. So there's something you can look at. If you have a look at their the link I have at the bottom, which is Craig's link on Craig Ross's website at Apex Futures. All of those margins are set out, and it's quite a good, well, it's a wonderful resource. What we have to do is figure out how well Frack-Zen is going to work with that. But just taking a sort of a sensible view, it should work very well, and it will certainly give you an opportunity for people with small accounts who want to get into trading and get going with things. It's a wonderful way to start your trading because you can do it on very, very small accounts. And I know money for margin is always a problem, particularly for newcomers, and that's certainly worth looking at. Our next page, folks, which you're looking at is Future Path Trading. That's our friend Jerry Winter, who we've known for many years. Jerry's done a number of Danielcode tutorials, quite a few, in Colorado Springs, where he always takes me to the famous steakhouse. It's an amazing place. If you ever get to Colorado Springs, don't miss it. They have the biggest steaks, too big for me, and they have Idaho potatoes. I've never seen the size of them in my life, and Jerry always takes me there, and we have a giant steak and an even bigger Idaho potato. And I think the last time we were there, Jerry, we made the mistake, or I did anyway, of ordering the Rothschild, oysters beforehand, half a dozen, and they were a meal in themselves. But anyway, the point is Jerry's done 3, 4, I don't know how many Danielcode tutorials. He's intimately familiar with Danielcode trading and these sort of rules, and Jerry's kindly offered a one-on-one consultation to anyone who's interested in learning to trade the Danielcode, and you can either call him on that number you're seeing, or you can call him on Skype, and he will offer a free one-on-one consultation on Skype for an hour or so and answer all of your questions. And Jerry made this offer a few weeks ago, and not many of you have taken it up, so I suggest you do. If you want to talk about Danielcode trading, Jerry's the best informed guy to do it. Free trials, folks. You know that we don't want you to do anything or put any faith really in what I tell you. I want you to make these decisions for yourself. and you're most welcome to have a free trial of anything that is on the Danielcode. So just contact Terry at support@thedanielcode.com, and he will fix you up with a free trial. We can also get you free trials of Trade Navigator. We always use Trade Navigator software. All of our auto trade programs run on Trade Navigator, and Terry will enable the Danielcode library of studies for you, so your charts will look the same as mine, which will make your life easier. I'm required to show you this next page, which is our compliance document. Trading is risky. It's even more risky if you don't know what you're doing. You can lose all of your money. So read this carefully, please, and understand that it is very important before you start trading that you know how to trade. You know these rules that I'm telling you, they're available at the Danielcode, and I always suggest that you start trading with a sim account, which is a simulated account or a paper trading account. Do not risk real money, please, until you've proven to yourself that you know how to handle it. Okay, so that's the end of the slideshow, folks, which means we can now go to the charts, which is great because I've got all this stuff I want to show you, and we only have about 17 minutes to go. So I had three charts I want to show you. This is the GBP USD. It's a Forex chart, and it has here an inside bar. It's in red. It tells you it's a true inside bar. So we had a sell signal on that. We actually had a blue line trade that carried forward, and I'm just repeating what I told you previously with a different chart. This trade, the sell signal was elected. You can see it traded below the low of the inside bar, which was 169.50, and because this was a Forex market, we wanted a 5-tick buffer, so we were trying to sell that at 169.45. If you were trading the inside bars, and if you were an experienced trader, you got elected, and you got a lot of money. If you were following the Danielcode rule for newcomers and newer traders, I use this rule on balance. It's better than trading the inside bars themselves. Statistically, trading highs and lows of inside bars is a losing proposition. So our rule said you will enter at the high or the low. In this case, it's a sell. So we're trying to enter at the low of the last bar that was not itself an inside bar, and that's way down here. But look what happened the next day. We did not get elected if we had our order where it should have been. But we can see that the trade itself was elected, and the only thing that stopped us getting in was Needham's inside bar rule. So once we've seen that elected, we are obliged to sell the next day to get into this trade. So we sold that low, and down it went and down it went. We finished up making a nice lot of money. And then we got a TO3 buy. The buy signal was on here, which was a valid setup bar for TO3, and then it was valid for, there's day one, it was not elected. Here's day two, it was elected. Okay, so we're long there, but just have a look. Use your great intellects that I know you have. Look at the setup. You had a key reversal bar very strongly off this important Danielcode red line. This is a Danielcode retracement number off a major swing, 1.6732. The low, believe it or not, this happens all the time, was 1.6732. These things don't happen by accident. I mean, it's incredible how the Danielcode numbers rule all markets. We got a key reversal bar at the important red line, very, very precise, and a TO3 signal to boot. And the rules say on the TO3, you exit on the first profitable close, which is here. And you made a few dollars, not much. But look at the setup. Look at what I've told you about how the blue line set up. Here are the rules. The fast stochastic, the 533, it's a Danielcode stochastic, special stochastic you'll get with the Danielcode library. It's oversold. The slow stochastic, 1433, it's oversold. Go down to the CCI, which is our proprietary momentum indicator, and we can say that the market made a new low for the move and the CCI did not. And that's the classic definition of divergence. So you've got everything set up for a blue line trade, except you didn't have a blue line. You had a red line there, but it is important. It's not as important as a blue line, but it is important. When markets are within the trading range, they can only hit the red and black Danielcode retracement lines because most of the time the blue line signals are outside the trading range. So you get that reverse. You look at that setup. A thinking person would say, this has got all of the elements of a blue line trade. They're stronger and go longer, and I'm going to hold this trade. Now, if you had multiple contracts, you could get out of some of them at the first profitable close, or you can just do what the rule is, that you follow the fast stochastic up with a 2-bar trailing stop. That means your stop is below the lowest low of the last 2 bars until it gets overbought, and it hasn't got overbought yet. So you're still on a 2-bar trailing stop. There's the last 2 bars. Your stop's under this bar here. And when it gets overbought or oversold, as the case might be, you move to a 1-bar trailing stop. And that's our rule for holding onto trades for a longer period. So instead of a few bucks, you got quite a few bucks. And you can see here, I just want to alert you, because sometimes people don't understand this, that a prime number in the retracement, I don't mean prime in a mathematical sense, although it will be a prime with a fraction, I guess, is 59.3. That's our main, that is the Danielcode number, 59.3. And that's a very common number for markets to hit in these retracement sequences. But it does have an alternate, and the alternate, which is available on your tool, is 62.5. And this is the tool that you'd be interested in. This is the Danielcode retracement tool. And normally 59.3 is the one. Let me just open this for you, show you what's in there. These are all the Danielcode retracements. 59.3 by default is the usual number that will hit. I put that on there for you now. This one went to 62.5. It's pretty interesting. 62.5 is a lazy number. It's a number that's close to a Fibonacci number. Now, if you know anything about Fibonacci, try to forget it. They're great predictors of the breeding habit of rabbit, but little else, even though much has been written about them, because they're simple, and simple people think they've discovered something. Well, what they found is some approximates. And the only reason that Fibonacci's work at all is that they have 2 sequences that are very close to the Danielcode sequences, which is what really controls markets. And the 62.5 Danielcode number is very close to 61.8, which is one of the Fibonacci numbers. And often what will happen is that market makers, when they don't know what to do, will park these markets at those Fibonacci numbers, which are only approximate. It's down here somewhere. But look at this. This market closed at this Danielcode number, opened at the next Danielcode number, and it's stalling there. Nothing to say it's going to turn. Might continue to go up, but you're in the trade. Your stop loss is 2 ticks under this bar. It's the lowest of the last 2 bars. It's stochastic. It's not got overbought yet, so you don't have to move to a 1-bar stop, and you've made a nice lot of money. Okay, that was one chart I wanted to show you, how the inside bars work. The next chart we're going to look at is oil. Let me move along here because I'm going to run out of time. And what this chart shows you here, Marilyn and others of you who are a bit new to trading, this is what we mean when we talk about true highs and true lows. This chart's got a lot of gaps on it, and you can highlight these gaps in Trade Navigator. Right-click on your screen, go to Edit Chart Settings, and when that box opens up, you go to General Settings, Price. Okay, click on Price when that box opens up, and you'll see this thing here that says Show True Range, and you can click that and select a color. Now, you'll notice that all of the Danielcode charts are red, blue, and black. And there's a very important reason for that. It's because I'm colorblind. I can't see, I can't differentiate other colors terribly well. I'm what they call a dichromat. 25% of the male population are dichromats, so don't get too worried about that. But I use a fluorescent green because I can see the color. And what I want to see here when I look at the chart, I want to see these gaps because let's just take this example here. You have, there's the bar that happens to be April the 29th, okay, and you can see how the market gapped down to open down here. Now, to do that, it had to move, and it had to move all that way. Let me get rid of the tail off that. And you can see that the market had to move from the close, which was 101.28, to the open, which was 100.76. And it did that overnight while the market was closed. But we still have to account for that movement because you have here the chart high, which on this bar is 100.76, but that's not the true high. The true high is actually that close there. Okay, so let's just pull that across and find an easier tool to use. Might be this one, and we can just put the tool on there, and that close was 101.28, and the 101.28 is actually the true high of that bar. So if you wanted to buy that bar, don't buy the chart high, which is 100.76. You must buy the true high, which is 101.28. And if you were going to enter a buy there, you would add the 2 ticks of the buffer, because this is a futures chart that would take you to 101.30. So don't forget that true highs and true lows are very, very important. And you can see exactly the same thing here. Here's a bar that has a low of 102.78, but that's not the true low. The market closed here at 102.33 and it had to make its way all the way up to this open, and we have to account for that in our trading. So this is the true low here, 102.33. Now markets love to fill gaps. Don't ever put your stop loss in a gap because it will get hit. Markets love to go back and just fill the gap. And that's a strong thing that markets do all the time. So if you don't know about true highs and true lows, and you put your stop underneath the actual bar, you will get hit. You might get hit anyway at the true high, true low, but it has to mean it to do that, which it doesn't have to do if you are ignorant of the meaning of true highs, true lows. The last chart I have, folks, is soybeans. And we need to move along here. Time goes so fast when you're having fun. I'm having fun. I hope you are. And this is the when to use a stop and reverse on the outside bar. Maryland, this is for you. What happens with markets is that time will have elapsed and there will be a signal, in this case to go short. This low of that bar, which is Tuesday, May the 20th, was 14680. There are 4 ticks in each point in a lot of these grains. This is one of them. So you'd be trying to sell that bar at 14674. It goes 02460. They're the 4 tick movements inside it. So we put a buffer on these in the hope that this doesn't happen, and it did here. 14674. If you got filled, you were short. But what happens then is a new force. These signals all assume that supply and demand are static and are not moving. And what happens then is a new force comes into the market and forces the market back in its original direction. That's what happened here. So if you're elected short on this trade, your stop and reverse on an outside bar is 1 tick above this setup bar, the previous bar, because at that point you have the definition of an outside bar, and that's where you go long. So you have to have a stop and reverse on every trade, and you can then exit first profitable close, or if you're comfortable that the stochastics are moving up and there's still momentum, you can hold it for a bit longer. Okay, so that's that. I need to move on to show you these Frack-Zen excuse me, charts or spreadsheets, I should say. Okay, here's futures. We haven't got terribly long, and I know you'll have some questions. Here's the futures spreadsheet, and you can see we have the totals by month. There's January, February, March, April, and down here this new one that Daryl prepared for me and that I've entered is 1 to 16 May. So that's half a month, and you can see absolutely extraordinary, $18,900 for the half month. Now, you can see looking above that markets fluctuate up and down. You have good months, not so good months, and can even have a bad month. And in February, you can see we had a massive month of 31,000, but the average of the month of these markets is running at, as you can see at the bottom, 21,000 a month, with only half of May gone. Now, I'm going to run out of time, but what I'd like you to do is think about which of these markets you would like to trade and should be trading. I'm getting to the stage now, Shift will remind me that this does not include, this is a hypothetical performance kept in a very detailed manner by Sage and Mustang, but it's still hypothetical, and it does not include commission, and it does not include slippage. These markets trade often. On average, they trade 12 times a month. So the commission that you get from your broker is very, very important. You need to get the best commission deal you can from your broker. And if you're trading a basket of these, say you're trading 4 or 5, you're going to run into a lot of commission. You should then ask your broker to give you a quote on the basket of futures that you're trading to keep your commission under control. It's a very, very big expense. The cost of the other item Shift always tells me to mention is the cost that you pay us for the signals, and that is at the moment $75 a month per market. So if you were to want to trade all of them, there's 11 markets there, you would be paying us $825 a month. Which certainly sounds like a lot of money, but I guess it's not so much when you consider the average profit has been over $21,000 a month. But being more realistic, you might pick 3, 4, or 5 out of here. If you've got a smaller account, you can trade 1, you can trade 2. The point is, the more of these markets you trade, the more close you will come to matching the model accounts. That's the accounts that the program itself, the results the program itself is creating. Now, having a look at that, look at this equalized margin line down here. I did this to try and give you a lineup, because some of these margins are as high as 25,000, and others, as you can see, are as low as 550. So you need to see this is an equalized margin function I created that lets you see the earnings if you traded the number of contracts that you could all on the DAX margin, which is the biggest. And you can see that sugar is by far the best. And it's followed. The second best is going to be the Russell. The third best, let's have a look. Then you're down to DAX, silver, and you may well choose to trade these and copper. Look at this, wonderful. You may choose to trade the best performing markets, but I urge you to broaden yourself a little bit from that. You can see, for example, here that you look at when I was looking at here, well, it is copper. You see, if you looked at copper before this month, you'd say, well, it's only had 2 positive months out of 4. It's not very attractive, but all of a sudden it's had a big month in May, and when you look at how small this margin is, it jumps right up to a big number when you compare it. So that's futures, folks. Here's Forex, and I got something special to tell you about that. Here's Forex. Again, I've increased, I've added in this line here, which is the first fortnight of May. Of quite extraordinary, 10,406 for the trading using the stops that come to you with the text. They're the stops that the program recommends. And this version down here is using 180 tick stop. Now, how this came about is that in March we had this losing month of $6,400. And Daryl went on a very, very detailed search to try and ascertain what had gone wrong and find some solution. And he tested all sorts of other stops, and he found that using the 180 tick stop as opposed to the stops that the text that comes to you with the signal recommends, it got rid of that negative figure and returned a slight positive. And so that's why we publish both sets of figures. You can use the text stops if you want to. You can use the 180 tick stop. It's up to you. The total for the using the larger stop is better, but if you look at the month by month, you'll see that the text stops outperformed in January, outperformed in February, and also outperformed in April. So just up to you to make that judgment. Now, what Daryl told me today, very, very interesting. He's saying that the Forex stops were hit an average of 6 times per month for January, February, and April, and 14 times in March. Just another reflection on the March performance. Now, he's talking about the text stops, and I went back to him and said, that's an amazing statistic, great sleuthing. 6 times per market per month was the question I asked. He said, no, 6 times total, i.e. all of the markets hit their stop 6 times. This is an average of the months. 6 times between 8 markets, then became 9 markets. We added this CAD chief after the first month. The total of all these Forex markets only hit their stop 6 times in January, February, and April. And in March, they hit their stops 14 times. And what Daryl's suggesting there is that there was an aberration, a lack of direction for the Forex signals in March that led to that loss there in the text stops, which could be cured by using a bigger stop. Now, folks, I'd like to talk to you forever, I really would, but I must just see if you have questions here. Let me see what we've got here. Okay, just bear with me while I drag this across and open it up, get to your question. What I was going to say to you is, I mean, you can make up your own decision. You've got these spreadsheets to look at. I mean, I think it's getting to the stage that we'll have to consider whether this Frack-Zen is in fact the best program that I've ever been able to show you. And I'm really getting to that point. It is so extraordinary. If you just look at this Forex, happens to be up at the moment. It's already returned 198% on margin, and it's very nearly 100% on the recommended account size, which is twice margin Daryl's used here. I think that's excessive, but that's what the brokers like. And if we look at the other one, you look at the futures results here, this program has already returned $105,000 across those 11 markets. I mean, it's absolutely extraordinary. Return on initial margin 157%. You know, that's in 19 weeks, folks. So, you know, it's up there challenging GMAD. If it keeps going like this, it's going to be our #1 program. So our business, of course, is for you people to trade well. If you trade well, you'll stay as members, you'll pay the fees, you might even recommend people come to us. And this thing was invented because I was looking for something where you didn't have to do all the work, where we did the work for you. You just get the signal on your cell phone, put the order on as quickly as possible, and the stop. Okay, I'll talk more about it. So, my friend Rudolph Gloglo, who's an amalgam of a couple of the great characters we've had here, we want to tell us about the Spy 200 talking in rhythm. That's an in-joke. My good mate, Shift. Hello, old fella. Look, it's a great day up here for drinking. I'm sorry you're not with me. It's sunny and warm, and I don't think it's a little bit all right in Sydney. You've been getting they call it a heat wave. It's certainly not that hot, but it's better than normal. So thanks for that. Johnny Miranda, hi. Neil McMillan, which platform will you use on Apex Futures? Ninja Trader, please. Neil, I don't know. That seems to be the one that they promote and use. They also have Trade Navigator. They have the API, as does Jerry at his firm. So you can use Trade Navigator, or if you want to use one of their other programs, go right ahead. Jim, does Jerry still do Broker Assist? Yes, he most certainly does. Jim, give him a call and arrange a conference with him. He'd be delighted to hear from you. And we've known Jerry for a very long time. Mac Cutchins, are you considering an auto trade program for Frack-Zen? Well, Mac, it's an interesting story, and I don't know what to tell you, because the minute I say we might have an auto trade coming, everybody says, oh, well, I won't trade this thing. I'll wait for the auto trade. So I can't tell you whether we have an auto trade coming. We've been trying to develop an auto trade for many months. We have 2 auto trade programs running. Neither of them are acceptable. The futures auto trade is running about 40% below the text program, and the Forex auto trade is a bit better than that, but not acceptable to me. So right now we don't have an auto trade. We will continue to try and get an auto trade. I can't tell you whether it's ever going to be possible. The thing, as Terry tells me the other day, is that nobody's ever created a program like this. I'm the first person to dream up this Frack-Zen stuff, and there's been no code written that actually adequately captures these particular types of bars that Frack-Zen creates, because nobody's ever seen them before. So it's so unique that we're having to write code basically every day as we go to try and capture this stuff. So if we ever do get an auto trade, Mac, it'll be yeah, good on you, mate. It'll be on the website. You'll know about it, and we'll be talking about it. But right now, there's a ton of money coming out of Frack-Zen, best I've ever seen, and you should be in it. And I hope you are. All right, guys, give Terry a call. His number's under contacts at the top of the Danielcode website. You'll be able to call him, and he'll switch on your trials. Here it is. Go to the top of this page, click Contact Us, and here are the numbers. Here's Terry. Here's his Skype. Here's his phone number. He's on New York time, so don't ring him too late. He's got young children. Here's Jerry. Here's the folks at Trade Navigator. If you need any advice there, talk to Melissa. She's an absolutely wonderful girl, great friend of mine. And Terry's, actually. She took us to dinner. I don't think a chick had ever taken me to dinner in my life. And Melissa took Terry and me to dinner in Colorado Springs. A very nice, quite fancy place. And, of course, I wouldn't let her do that. I appreciate it all, but I finished up paying the bill for everyone, as I usually do. But she genuinely invited us out for dinner, entertained us royally, and was prepared to pay the bill. I don't know whether she had an allowance from Trade Navigator, but first time it's ever happened to me. What a lovely girl she is, and she's a glamour too. She's got the same problem I've got now. She's getting a bit older, but I can tell you she's a very, very attractive lady, and not so long ago she really was Miss World, and great fun. If you can get hold of Melissa, get hold of her, and if you can't, talk to her on Skype. And she'll give you a free one-on-one training on Trade Navigator. So, folks, that's it. I hate to leave you. I could talk to you all day. I haven't even started to talk to you about Frack-Zen and the implications of it all, but we'll hopefully have another webinar next week. If not, it'll be the week after. It's a short week next week, but we might have one. And hopefully we'll also have Daryl with us there, who'll be able to talk about it. Akshay, hi, my friend. Can we provide Frack-Zen signals for Nifty? Yeah, we can. Can we get live data? Akshay, write to me, please, mate. We're looking at Frack-Zen signals for the Hang Seng in Hong Kong, the Nikkei, and we can certainly do it for Nifty. If you can get us enough people interested in it. It's quite extraordinary. Guys, we're having awful trouble getting live data for the Hang Seng. in Hong Kong. If any of you know how to do that, Trade Navigator told me they've had discussions. You can't get it, or it's massively expensive, like $10,000 a market sort of stuff. If any of you can get live data for the Hang Seng index, the futures we need in Hong Kong, please write to me and give me a lead as to who I could talk to about that. I mean, honestly, get this thing running on the Hang Seng and the Nikkei, and boy, there'll be all the money in the world. And Akshay, you might be able to get all of that. Scraps off the table. Failure to close so no one can rely on a service on a sustainable basis. I don't really know what Bob's talking about there. Don't know. If he's talking about Danielcode, we don't want you to do anything without making your own decisions. So please organise your free trials and get looking at this stuff because it's hot. Okay, folks, have a lovely, enjoy your Memorial Day break. Remember, markets will be pretty thin probably tonight, or tonight's your Friday in the US, and that markets will be closed on Monday. I thank you for your attention. Marcel, my friend, nice to see you. Should have a look at this Frack-Zen. It's pretty amazing. I hope you're feeling well, old mate. Folks, thank you for your attention. I'm sorry I've gone over today. There's so much to say, and didn't get to say it all anyway. So I thank you, and I'm now going to close the webinar.